Hey, good morning, everybody. Today is Tuesday, September 1st, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. Stocks traded lower after 4 consecutive days of gains last week. For the month of August, the Nasdaq was down 6.9%, the S&P 6.3%, their worst months since May of 2012. Markets continued to trade in a very tight range yesterday, but closed near their lows for the day. Trading volume was mixed, higher on the New York Stock Exchange, but lower on the Nasdaq. Although Friday and yesterday saw relatively tight trading ranges, I would expect the market to be volatile for a while as we try to digest the huge sell-off days of the past couple of weeks. It wouldn't surprise me if we go on to retest recent lows. That being the case, bulls should be cautious. There's no reason for bulls to be buying stocks until we see a follow-through day. A follow-through day is a day at least 4 trading sessions from the market bottom, in which one of the major averages increases 1.25% on heavier trading volume than the prior day. The low in this correction was on Monday, August 24th, which means that if we don't undercut that low, we could see a follow-through any day now. Declining issues bettered advancers yesterday by a 9-7 margin. The New York Stock Exchange advanced decline line remains bearish. New lows bettered new highs. Our market timing model is on a primary sell signal, but our secondary signal is an aggressive buy. Most traders should continue to maintain stops at their tightest levels, continue to accumulate cash, and perhaps hedge portfolios with contra ETFs. However, our most aggressive traders can begin to selectively buy, keeping in mind that our primary signal is a sell, and buying here can be hazardous to your wealth. The O'Neill market timing model is indicating a market in correction, but yesterday was day 6 of our attempted rally, which means that we could see a follow-through day any time now. It's important for us at this juncture to keep our watch lists up to date. Small capitalization stocks outperformed large again yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. Our swing timing model is indicating a neutral condition in the market. In this squirrely market, we should continue to err on the side of caution. A reminder, we're on a primary sell signal in the market while our secondary signal is aggressive buy. This market's going to continue to be volatile and prone to whipsaw for a while. An aggressive buy signal means only the most aggressive traders should venture back into the market on the long side. Our underlying market timing signal is still a sell signal for conservative traders. Be careful. Okay, what we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum investing, which is what we're doing here, is that we need to identify where the power is in the market and get out in front of it. So let's see where the strength in the market has been in the past week. Coal operations have been very strong, up 21.6% in the past 5 trading days. Oil and gas service and equipment up 17.9%. Oil exploration and production up 17.2%. Renewable energy equipment up 13.2%. And rounding out the top 5, consumer electric and appliance stores up 10.9% in the past 5 trading days. We are definitely getting an energy theme going here. Between coal operations, oil and gas service, exploration and production, and renewable energy, we're starting to see energy stocks move to the top. Okay, let's see what the Nasdaq Composite was up to yesterday. Nasdaq was down 51.81 points, or 1.07%. We closed at 47.76. Trading volume was below the prior day and also below average. Nasdaq traded in a very tight range yesterday. and closed near the bottom of its daily trading range. Closing near the bottom of its daily trading range is more of a bearish signal than a bullish signal. For you followers of William O'Neill, we're currently in a market in correction. We've been in a market in correction since August 21st. Right now, the NASDAQ is bracketed by support down here in the 42.92 area and resistance up here in the 48.88 range. Our primary signal on the NASDAQ is a sell signal, but we are on an aggressive buy signal, which indicates that the most aggressive of us can begin to selectively buy, but most of us are going to want to have our stops at our tightest levels, continue to accumulate cash, and perhaps hedge our portfolios to the downside with contra ETFs. I want to go over real quick here what a buy signal in this market would look like. In order to do that, I'm going to take off all of our markups, and all we're going to leave on the chart is our 10-day simple moving average, which we show in green, our 21-day exponential moving average, which we show in pink, and then right here, this black dotted line is a 1% envelope around our 21-day exponential moving average. In order for this market to go to a buy signal, we need to see our 10-day moving average sloping upwards. We need to see our 21-day exponential moving average sloping upwards. And we need to see the market get above this upper envelope. So as you can see, we are a long way right now from getting a buy signal on this market. Let's see what the S&P 500 is up to. The S&P yesterday was down 16.69 points, or 0.84%. We closed at 1972.18, and trading volume yesterday was higher than the prior day, giving us a distribution day. For you followers of William O'Neill, we are in a market in correction. Right now, the S&P 500 is bracketed by support down here in the 1876 area and resistance up here in the 2044 range. Our primary signal on the S&P 500 is a sell signal, although we are on an aggressive buy, indicating that aggressive traders can begin to selectively buy in this market. Keeping in mind we're on a primary sell signal, and buying at this level could be hazardous to your wealth. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate, Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.